Good afternoon, everyone. Welcome back to the YouTube coaching channel for Charles Schwab, known as Trader Talks. Today, we are talking after the close, and I am your host, Kevin Horner. Thank you all for being here today. We are going to dive into some charts for tomorrow, the rest of the week, maybe even the rest of the year here, because as we move forward into 2026, we are kind of revamping the After the Close segment, and I want to give you all a little bit of a heads up about just that. So as we go into 2026, those of you frequent attendees should know that we're renaming this. We're keeping my time slot here, 4 p.m. Eastern, beginning again in January, but essentially we're renaming this. It's going to be called, let's see here, After the Close, moving into something a little more maybe equity specific. And the name we haven't quite detailed just yet. So essentially it's going to be a little more stock shares, building that portfolio, leading us to more management of that portfolio as we move through 2026. The plan will be to put us into positions that we can manage throughout the year utilizing trend analysis, which we obviously discuss quite a bit here in this class. So do be aware of that as we head into 2026. That does leave us one more session in the year next Tuesday. That'll be the 23rd, and I will be here for that. So as we round out the year today, we will place a couple of new trades for you. I'm going to actually let you all decide where you find yourselves today. Are you feeling bullish? Are you feeling bearish? We're going to look at the broad market a little bit, and maybe that'll help us feel a little to kind of get some clarity as to how we feel heading into the final 2 weeks. But ultimately, I want to know, do you want bearish trades? Do you want bullish trades? And I'll show you some scans for each as we look through things. And I know it can be difficult. If you're a trader who is optimistic like I am, you're constantly looking for bullish opportunities, and trading bearish ones can be difficult. And trust me when I say you're not alone in that time, in that process. So let's go ahead to review disclosures. Oh, before I do want to remind you, we're joined by my good friend, Barb Armstrong. She is a fellow coach, a former student of the education here at Schwab, and is a wonderful host for the shows that she offers. Make sure you're following us both on X, Barb Armstrong CS and Kevin Horner CS. The best way, certainly the easiest way to meet up with us coaches when we're not hosting classes for you here. So let's go ahead and review disclosure so we can get right into things. I'll remind you that our discussion is exclusively informational and educational. We do not make recommendations. We do not endorse any specific approach to trading the market here. We do, however, discuss technical analysis. As we do that, we remind you that it should not be the exclusive means of your research. We think it can help you out, obviously, but it's just one piece of the decision-making puzzle. So please be sure to utilize multiple pieces of data as you do that. Now, in this class, since we do trade options, you do need to be aware that we're working in a paper money version of the platform. And that means that we will never receive early assignment on options in which we are short. However, in real life, this can happen. Of course, you can be assigned on any short option anytime, including when you're not in the money, and any time prior to expiration as well. So please keep all of that in mind. Now, let's jump to the close of the market today. We'll take a look at the SPX. And I think the interesting thing is maybe how we finished out the day. As I zoom in to what's been going on since about September, we're going to see that we found today an indecision doji right at the 50-day moving average. In fact, intraday, we came down to the 50-day for what appears to now be a successful test. So our intraday low broke below the 50-day moving average. That should not surprise any of us. And then we got a close that is essentially on our open. So our open today was 6,800.12 and our close was 6,800.26. You can't get too much closer to an actual full-on doji than you got right here today. So now the question is this the opportunity bulls are looking for? A successful test of the 50-day moving average can give them the confidence perhaps to enter those bullish opportunities in the SPX. Might feel similarly relative to the NASDAQ, except that the NASDAQ actually broke the 50-day, 20-day confluence. So some traders would suggest that if today is a good move, and certainly this is not a bearish candle today, everybody. Yes, we made a low intraday, but we did finish above the open by a decent amount. Our open here, 24,991, and our close came in at 25,133, just shy of it. So that tells me that we were up about 140 from our open today, and that's why that candle is nice and filled in. Now it doesn't, it's not back above the confluence of the 20 and the 50 yet. Some bulls are waiting because a close tomorrow over today's high would give the belief, or perhaps give the view for trend traders, that you've got the entry signal with a hold, a close above the high of the low day. So maybe the NASDAQ offers opportunity. It could be a little early for some traders. Some would like to see a little confirmation with a close there tomorrow over today's high. And of course, that new high, if it did give you that, it would be above the 20 and the 50. So once more, traders would be thinking about continuation of the longer term trend. And then finally, in our Russell today, we are a little bit weak, but you can see that the pullback over the last 3 days did violate the breakout level, but we do have the upsloping 20-day moving average maybe coming into a spot where we can get some support. Could also say the same about this ledge right here, where we essentially stopped today's selling. Now, no, that candle is not green. No, it is not a doji for indecision, which can commonly be the end of selling in a pullback. But it is pulled back to a proper level. Some traders will look at the fact that we got that 20-day now sloping upward through the 50. They might like to see that. So nothing wrong with that. But maybe from a leadership standpoint, if we're leaning bullishly based on these 3 charts that we've just reviewed, I think some traders might lean a little more into the NDX or the SPX. Now, one final thing is just let's look at the semis here just to see if there was a proper pullback there. And we sure could say that that's a proper pullback. This is an interesting situation simply because if we lean into our technical analysis tenets, one thing we see is an intraday move through the 50-day moving average to the downside, and yet the close today was above it. So the 50-day at the close, 6948.23, and today the close at 6990. So, or excuse me, 6958. I apologize. So at 6958 versus the 50-day at 6. I got these numbers a little bit skewed. I apologize all. 50-day 6952, close 6958. So we did trade below the 50, but closed above it. Now, again, some traders want to see tomorrow, do we get that follow through? Do we close above today's high? If we do, today would be considered perhaps the low of the pullback, which could indicate that we are set up for that. What many are talking about, that potential Santa Claus rally. Now, it is a little early for the so-called Santa Claus rally, believe it or not. Traditionally, that falls into the 3 days approximately ahead of the Christmas day. So you would be looking at, the rest of this week into early next week as being the window of time. So this does look right now like a successful test. The question will be, Greg, tomorrow, right? How do we open? Do we carry any optimism through today's highs, which will give us some optimism that we can get this thing moving right back to the highs that we just visited. So a lot of the same stuff in your SPX, NDX, and SOX. Maybe the Russell just a little behind the others. So in terms of bullishness, that's what we're looking for. Now, I do want to ask you all, how are you feeling? Okay, are you bullish? Are you feeling bearish? After looking at the SPX, the NDX, the RUT, the SOX, how are you feeling? Let me know. Put it in the chat. Let's see what you think. We're going to look at some scans. I definitely have opportunities that are bearish that I'm happy to share with you, but I thought we could look based on what we got out of the SPX and the NDX. You know what? Majority of our time, the market has this upward bullish bias. And if we had price action today, violating or testing our major moving average. So I don't have any problem with cautiously bullish, Zach. I like that. Camacho, sideways. Okay. And more bullishness, of course, Will, I know you're bullish. You've got that attitude, that optimistic viewpoint, right? I know how you guys feel by and large. So one of the nice things is we could actually take Tom's thought about being neutral and couple that with the cautious optimism that so many of you seem to be feeling and talk about the potential to maybe be selling options rather than buying options, right? Now, the truth is the VIX continues to fall, so our options we will not have implied volatility that's excessive in most cases, unless, of course, we maybe are working with a period of earnings, for example. But I think by and large, we're not going to see that. So what we might very well do is be able to find bullish opportunities in the S&P 500, for example. And then we could talk about selling options that might be, taking a bullish stance. So in the standpoint of that, if we're thinking about stocks that are in the S&P that are upward trending, we could talk about short put verticals, or as Eric is pointing out here, long call vertical as well. Is noting here, buying with low volatility is a plan that many traders will incorporate. So as the VIX hangs out in those lower levels, traders tend to be a little more comfortable buying options because the premiums are not as juiced up. So there we go. There's a brief explanation. Let's move to the scan tool and let's start finding some opportunities. So I have got, this is a bearish one. So let's go to bullish ones. I'm going to go to my drop down here. I'm going to load up. How about a 20-day moving average pullback? So here, everyone, we're going to look for stocks who are pulling back to the 20-day. They are in an uptrend situation. So look, this is how it appears in one of these study boxes. So I've got simple moving average. The 50-day is above, let me see what this is, the 100-day, okay? So a 50-day moving average on the left is a greater than the 100-day. So that's a good intermediate uptrend. Here, it's the 20 above the 50. So it's also a short-term uptrend. And then we might just want, let me see if let's also add a third one in here just to be certain. So just to give you guys a step-by-step as to how I did this, I'm going to select study. I'm going to type in simple because I want the simple moving average. And here I'm just going to say, let's make sure that the 100-day simple moving average is greater than the 200-day simple moving average. And this way, again, I'm just adding another layer of time to the trend. And so what it does is it increases the likelihood that we are finding securities that are in extended uptrends, not just a short term, but an intermediate and maybe even a long-term uptrend. And because we're asking it to do that as well, we're going to tighten up and refine our list. Now, the two main important things about this one, everyone, is that we need an intraday low that is below the 20 simple moving average, but a close above it. Okay, that's what looks like the S&P 500 to an extent today, with that close below both the 50 and the 20, the intraday low below both, but then the close above them. Okay, so those are the key components. So let's go ahead and scan for that. And I've got a pretty tight list. Now, from our standpoint of being able to visually see how this shakes out, I'm going to quickly save this. Whoops, right here, save it as a watch list, which I then have to give a name for. So we're just going to use today's date. Save that, and I'm going to launch a brand new one here. So 12/16/25, make sure I link it up with my chart, and then I'm going to change my watch list so that the watch list is giving me just the columns I want, mark percentage change, percent change, and then the actual dollar amount change. And so that list is right here ready to go for me, and now I can just go to my chart and kind of work through them. So Akamai offering kind of a bullish opportunity. You can see why it made the list today, everybody. Let's just highlight this. Intraday low right here. The 20-day in orange is what we're basing this on. And then we closed. So intraday below it, closed above it. Perfect example. That's exactly what we're trying to locate. Now, in this case, maybe not ideal from the standpoint of building our trade just yet, because we are still within the cloth portion of the flag. Many traders are waiting to break to the upside before they establish the trade. So buying stock now would be a little early. Putting on an option play would be a bit early as well for many traders. Let's see what's next. CINF. All right, so we've moved to some zone of resistance there, but we've also got a well-confirmed support at the 50-day. Some traders might look at this one and feel comfort just because they know that they might very well choose to move on under 161. We're not that far away, only about 4 points here of difference between the last trade and an exit strategy. So maybe that stands out. Oh, is that right, Hope? Have other coaches been doing Akamai today, or has that made it to maybe the network or someplace else? Because I've been away most of the day today, so I'm just coming back to teach the class. But never a shock when, us coaches, we come across the same things frequently. Let's see how Cisco's looking. Okay, that one is sitting right at it. Now, clearly, this is going to be to the pennies, it looks like, everybody. Look at the 20-day there in orange. And our low today at the 20 was 77.38. Our close is 77.55. And the 20-day is 77.54. So we closed a penny above it. So some of you would just be like, yeah, that's perfect. And you might very well start a new position on Cisco right there. And I could understand why. Let's keep on looking through here. EIX for Edison. That's a little different. We clearly have some resistance overhead. I think a lot of traders rather this move already before starting something here. Doesn't mean you couldn't, but it's pretty clear right now that while this might be an improving chart for you traders, this one seems to be one where you would rather it move to those new highs first. That would give you the confidence that it is moving out of this range, right? And this is a pretty decent range. Essentially, it's about 10 points actually. Here, let's go ahead and duplicate that. We'll sling that line down. And here's what I'm going to do. I'm just going to change the detail here. So I'm just going to put the line at 48. I don't know if y'all knew you could do this. You could just set your levels. You don't have to draw it. If you ever get frustrated by this, where the line goes and I like to line my stuff up. That's how I do it. I just cheat and I just move the levels down. So 48 is the low. If it were to break, there may be a $10 move in the position, but it might be as long as a year for that to play out, because look at how long. I mean, we've basically been in that range for almost an entire year. So that's where I came up with that. And that concept of 10-point range, if it breaks to the upside, that is simply considered a measured move. Doesn't mean it's going to be achieved, of course, even if we took out and traded over 60. But that's what some traders would look for to target it. So they might duplicate the line, edit the process again, and maybe they start thinking about, let's just round it to a nice figure like 70 and then see where that line pops up. So that's 70, but you can see the gap up here and maybe even the gap there at 77-ish might be in play eventually on a move, but an improving chart in Edison there. EW made the list. Way big move here today, right? Everybody, look at that one. Way low open, held the 50-day. Interesting spot for a bounce. We had some resistance in here before, didn't we? This one might be opportunity. Now, if you caught it early in the day, it would feel a lot better because then your risk tolerance would be much tighter to that 81 price compared to the 85 we're looking to enter at. So maybe not yet. Here's Pfizer, still in an uptrend. Maybe you could call that an entry opportunity, but that's what that one looks like. And then PLD for Prologis, a REIT, made the list. Pull back to the 20 after having broken out to the upside, broke a little bit there. So there's some interesting scenarios associated with the 20-day. But I did think that upon my review, and by the way, everyone, I'll share this 20-day scan with you so you have it. In fact, actually, I'm going to remove one thing. I don't need this one now. So I've got the simple moving averages. So the 50-day above the 100, the 20 above the 50, and the 100 above the 200. That's how that shakes out, okay? So that's what's in there. And then again, the intraday low below the 20, but the close above it. So this is just the 20-day one. And we're going to go ahead and move to the 50-day here. So here's the 20-day. I should probably title it as such. And please remember that with these scans, these are not guaranteed for accuracy. They are not guaranteed for timing, and they are not a recommendation for your use. All right, we're going to load up a 50-day, and let me see if my 50-day moving averages are going to make a whole lot of sense here. So we've got the input. Oh, I'm going to clear that one and go with, there we go. So this is going to basically be just the same thing, except that we are looking for intraday action below the 50 and intraday and then a close above the 50. So 50-day moving average uptrending greater than 100-day. We can add in some other criteria here. As you can see, this is pretty basic, right? Low below the 50, close above the 50. That's it. Now, so let's add in those other moving average details to make absolutely certain that we're finding something uptrending. So we're going to look for a simple moving average 20 that is greater than simple moving average 50. There we go. All right, so I'll hit OK on that. Let me go ahead and save that scan query. There we go. And again, we're just scanning in the S&P, so that's going to be my default, but by no means the only option, as you can see. So let's go ahead and make this one saved, and we'll look at these. There's a couple in there that still pop out, right? They are the same names because, and in many cases, everybody, the 20 and 50-day moving averages are right on top of each other. All right, so this one we're going to call A. And I'm going to change that right here. There it is. Go to my chart. All right, let's see what we got. CBO. Oh, there you go, everyone. How about that? Right to the 50-day. Pulling back. Some of you would say, yeah, that's okay. Some of you would prefer that we've already broken the flag. But I think for our purposes, everyone, we'll go ahead and place an order simply because we are at the 50-day. Could we be a little bit early? Sure. But our support here lets us know that if we traded under the low we made yesterday, a lot of traders would say, I'm going to move on. And that would be possibly just fine, right? As long as we build it into our process. So if we're looking at this one today, for just the next couple of weeks, we might be looking for an exit for equity shares under 244 approximately, or a profit exit at prior highs, which would be 262. So we're looking at somewhere in the neighborhood of 5 points of risk for about 13 points of opportunity. That's better than 1 to 2 risk versus reward. A lot of traders look for 1 to 3, but 1 to 2 can absolutely work. So let's go ahead and put this one in with a belief that as long as we get in somewhere in the vicinity of 249, that will be okay. Now, when I say okay, reminder, we're gonna put in a padded limit here, which means our buy price is going to be a little bit higher than today's close to increase the likelihood that we get the shares that we're searching for here. Now, we're not going to go with a big full position. It is 100 shares, and that'd be about 25,000, a little bit more than what we want in most cases. So we'll just keep this one kind of limited in scope. We'll do about 50 shares instead. Now, as I said, we're going to look at that last low. And that last low was 244.74. Now, as a reminder, some of you traders want to be very disciplined in your process, and no one would fault you for doing so. So some traders would look at this and say, I want to either use a level below the last low in this case, or they might look at the average true range, the ATR. And if the 50-day moving average is providing us support the way that we believe it is here, well, then they might take the ATR amount below the 50-day moving average and set their level there. So let me show you how I might consider doing that action here. If we take the 50-day average today, which is at 248.63, and we reduce it by the amount of the ATR today, $4.85, well, then we come to 243.78. Now, again, in this case, that is below by almost $1 below the low we made yesterday. So that math and the confluence of those levels coming together can make a lot of sense for many traders, right? So if essentially looking below that low, calling it $1 beneath it, let's go with that. 243.74. In fact, we could go a little lower and make sure it's at least $1. So let's go ahead for an entrance here utilizing a one cancels other bracket. Okay, so our prior high, neighborhood of 263. So we're just going to set the target up there at 263. Our entrance tomorrow needs to be that padded limit. So I said the close is 249 approximately. We're going to go to 249.50. Remembering that if we get executed, it won't be for any more than 249.50. But if it's lower than that, we will get the better price. Okay. So then our exit, and again, our buy is only for tomorrow, but our exits need to be good till canceled. So we're going to set 263 as a target, and then we're going to go with that low below this, right? So the low, we said 243. We're going to go 243. Let's see here. What was a good year? No, 243.76. Why not? That's 76. Fantastic year. Trust me when I tell you that. All right. So there we go, everybody. Now remember, we can't guarantee the price on the stop, right? Stop is a trigger. Okay. But our risk here is essentially about 6 points. And then our upside, if we get in there, is about 13.50. Okay. Now we can't guarantee price, so we do have gap risk. So if we closed above it on a given day of the week, but opened below 243.76, we run the risk of being sold at a much, much lower price than the one we are striving for. So we can't guarantee that we're locked into that, but we're trying to be. And I said I was going to make that for 50 shares. So let me make sure I make that adjustment. There you go. 50 buy and 50 to sell. Our buy is only good for tomorrow if we can get in for this price or better, and then our good till canceled exits. And there you go. Okay, now I mentioned I do have bearish ones as well, but before I show you some bearish, I want to share the scan we just made here just for the heck of it, because I know so many of you like to take advantage and work with these scans and see how they play out in your own practice and your own examples. So let me share that one with you here. Same detail applies, of course, that the scans are not guaranteed for accuracy nor timing. And I'll designate that as the 50 DMA test. Go. All right, now let's look for something bearish, and then I'll share that one and see if we've got anything to work with. So I've got downtrending, but I've also got a bearish 50-day, I think. Let's see. Yeah, there's a bearish 50-day test and fail. So let's go ahead and look at this. And of course, all I did here, everybody, is inverted my specifics, right? My specs are changed. The high has to be above the 50-day, but the close has to be below it. Additionally, when I'm looking at the trend, I want the moving average, the shorter term moving averages below the longer. So here, the 50-day moving average is less than the 100-day moving average. I could also incorporate another one to increase the, I don't want to go that to price. We want to go to study there. So we'll increase the likelihood of finding a downtrending stock by making a speedy moving average like the 20 also be less than the 50. There we go. And we've got a couple of details, but I wanted to make sure we saw that. And then again, we're scanning exclusively in the S&P 500. Let's see what's bearish. And then got a pretty good list. Interesting. Real estate, a couple of staples, even a couple of discretionaries. So let's create a watch list for that. And there we go. And we'll change this one. And let's just kind of work through this chart. And if nothing else, everybody, I hope the takeaway here is the clear effort that the scan tool is taking off the table from all of us. Here we're again wanting to find stocks that traded above the 50-day at some point today, but closed below it. In this instance, Abbott, as you can see, we've met a downtrend line. And if I zoom in, you can see clearly we were through the 50-day in purple yesterday. In fact, I'll just put only the 50 on. That'll make it even easier. Here we were. Last time we were above the 50, we got rejected there. So this might be the beginning of a continuation downtrend since we were above it today, closed below it. AWK, something similar. Above it today, closed below it. That might be opportunity for some bearish traders. And remember, there's an opportunity further here that I'll share quickly. If you are wanting to be bearish, but struggling with this stuff because the charts don't make sense, right? And what I mean is we're all a little bit different in how we think about the market, right? You can have all of the information about the market's history at your fingertips, and you can still be uncomfortable when you need to be comfortable. You can be difficult to see bearish scenarios. Don't forget, you can just invert your chart, everybody. So this AWK, I can clearly see can be bearish. And of course, nothing has to be anything, right? Anything can change in a moment with price action. But this looks bearish given the line I've just drawn in here. Let's color that properly. But if you wanted to flip this over, we can just invert the chart with a minus sign. So put the minus in there first and then do AWK. And now I have the inversion of that chart. And this, as someone who is an optimist and a bullish trader by nature, if I look at this, I could say, well, clearly this is a buy. All I need to do is remind myself that I am looking at the inverse of this chart. So in reality, what I think is a buy might very well be a sell. Right? If your brain is speaking to you, well, Kev, this looks like a support line test at the 50-day, at the former resistance, now potential support, you would not be wrong. Just recognize we're looking at an inverted chart, and that means we need to play the other way. So AWK, pretty interesting with its position here. This would be one where some traders, everybody would look to do either a short call spread at prices above the ledge we're looking at, or maybe a long put spread where they would be targeting perhaps the recent low in this vicinity. Kind of a tight trade. It's only about, say, 5 points, so not necessarily ideal. On my overall list here, I do have a couple that made the list that are not bearish, unfortunately. But I wanted to kind of work our way through the look here to highlight how some of those charts should be popping up for you if you're going to use these scans. So there's another one, Cisco, the other Cisco, as we often refer to it, the Cisco Foods here. You can see how lengthy we were above the 50 there and how well that worked out from June basically until October, about 4 months where we rode the 50-day, and now that we're below it, 50-day continuing to act as resistance here, and some traders would position it as such. So, RSG, right to the magnet of the 50. That looks pretty instructive, I would suggest. See about O Realty. Yep, something similar, right? Here, you might feel even more confident bearishly simply because today's prices, we've closed below the low of the high day on the bounce back, and the bounce back occurred at resistance. So that carries a couple of additional layers of intrigue for the bearish trader, perhaps. Okay, let me go ahead and share that scan with all of you so that you have it. We'll resave that as bearish 50-day test and fail. And there you go, everybody. So we'll say bearish 50 DMA test. There you go, everyone. When I found that out, Alfie, I went, Wimiku, yes, good on that. I love that the inverted chart. Inverted chart was very helpful to me, mainly because I'm such a bullish trader. I'm just lean that way. It's hard for me to justify trading bearishly. There are plenty of examples of opportunities, but nonetheless, I struggle with it, believe it or not. So this is an interesting setup on O Realty, though. Let's look at my example portfolio. Yes, we're going to be adding to it hopefully tomorrow, but let's take a peek at what's going on here. So I'm going to make a quick change so that I can see my account positions here, current account positions. So there we go. Now we have, let's see, do we have underlying just equity shares? Yes, we do. We have the ASTS. So last week we put on a trade for ASTS Space Mobile. We bought 100. We are in a little bit of a loss, but we've got a sell order protecting us, much like we just did a moment ago with our buy order. We are going to see here that on ASTS, we've got an exit strategy. We do not have an exit on the upside. We built our order here based on what we thought was a hold of the 50-day moving average. Remember, we go back 5 days, so it was the 9th here, right here. We closed right here, and then the stock did exactly what we were hoping for. It rallied. It only rallied for 2 days before selling off, though. Now, we did incorporate average true range on this one, everyone, just like we did in the trade, the example trade we did earlier. So we utilized our 50-day moving average, the approximation of the average true range, and placed a stop below the 50-day by that amount. So the 50-day, we pegged our stop level at 63.94, and today's low was 65 and a quarter. So we weren't that close, but we are definitely not changing our stop. Somebody might feel like they want to raise it a little bit. That's okay if you want to raise your stop from here. But one thing we do not do in our classes here, we do not reduce or decrease the stop order price. We let it go because we built our trade under the knowledge that that was going to be the point at which we admitted defeat and moved on from the trade. If we reduce that stop price that now, we put ourselves at more risk. We run the risk of losing more money. We are not going to make that decision. All right, so there's ASTS. We'll let that one go. Good candle for us today. Hopefully that gets back in gear. Let's look at Caterpillar. All right, so Caterpillar, still in an uptrend, made a new all-time high, coming back to the 20-day moving average. Everything looks good here. Let's look at our position on it. We are long a 530, 580 call, and our last trade is still above 580. So that means we are looking at essentially our best case scenario, right? It as a $50 spread. We have the opportunity to make that less what it cost us to put on the trade. So we can quickly take a peek at how we put that trade on here. Let's see if it's going to, let's go to our account statement. And let's just put in cat for the last portion there. So we bought that at a 32 limit. And so that means we can make 1,800 maximum, assuming we don't do anything with the contract. So 32 cost to make 18, obviously not the same type of risk versus reward that our underlying equity trade gives us. But the takeaway today should be that we've got a lot of time remaining, and that's why our P&L is only 785. In order for us to get all the way up to the max gain at 1,800, we have to basically carry this until the 16th of January, or the price of the Caterpillar call, the price of Caterpillar goes dramatically in the money. That would mean to be dramatically higher than 580. So, if we started seeing CAT over 610, even with 2 weeks to go, we might be nearing a window where you're going to see a higher P&L. But recognize that if we took this one off today, or set to take it off maybe as early as tomorrow morning, of course, we could do so, but we would be leaving some opportunity on the table. The real question now is, do you think that CAT can stick over 580? Because that's all we need to do. As long as it stays over 580, between now and Jan 16, we're looking at a max gain on that CAT. So we'll see how that example plays out for CAT. We have a a long put on 4. We had entered this as a long put vertical, long the 70, short the 60. The stock instead had bounced. So here's what the chart looks like. And now the stock is moving lower. Last week, the stock was up a bit. Okay. And so our pricing on the 60 call had kind of whittled away to next to nothing. So we bought that back. And so today, intraday, some traders might have been able, if they were, the diligent trader that I'm not, they could have maybe been able to close out the 70 put for a bit of more profit than what you're seeing. Right now, it's a $10 loss. But again, we've got until Friday. So I'm going to place an order to sell this one in the hopes that this maybe goes deeper tomorrow. Let's go ahead and just do a goal of getting out of this at 6. That'd be about $1.10 to the upside from the current bid, or the midpoint, I should say. And if that happened, we'd make $100 on the trade. We'll put that as good till canceled. It's only as good for the next 3 days because, of course, we are going to see this contract expire essentially on Friday. So I'll place that for tomorrow. And then Jan 16 here, last one, then let's skip over the HCA and let's just check out ServiceNow, 850, 820 put spread. Again, this is a long put vertical that has now moved in the money for us because ServiceNow got beaten up a little bit in the last week, as you can see. So where we leaned properly here was evaluating the resistance at my white line and the fact that we were below the 50-day moving average to play into this move, and it has worked in our favor. Now, we can go ahead and choose to close that one if we want, but again, with ServiceNow, the last trade, just double check, 781, and our positions are the 850, 820. Okay, so again, we are now 40 points in the money on the short put. So as long as we stay under 820 between now and Friday, we're going to be looking at a max gain scenario. And here's what that trade looks like on now. So we entered it for 19. Our max gain is 11. The difference between the 30-point spread and what we spent. And our market value at close is 1030. So we could absolutely let $100 go. Let's go ahead and place an order to sell this one at the essentially the mid, if we can get out at the mid tomorrow. Actually, that's not what we want. Let me double check on this. So we got in on the spread at 19. So let's try and sell it at 29, which would give us the walk away of about $1,000 total. And let's see if we can get that done for us. We'll do that at any point between tomorrow and Friday. All right. So, hey, a couple of those worked out really well by incorporating standard technical analysis as an understanding of how to manage our risk. And in this case, worked really well on a couple of those. We know better than to think that it's going to work out every time, but that's what we're certainly striving for. If nothing else, a well-defined risk strategy can at least leave you comfortable from the beginning of your trade to the closing of your trade. And truly, that's what we really want to see. So with that, let's wrap it up. Thanks for being here. Big thanks to Barb in the chat, as always. We shared a bunch of scan details with you all today. Please take advantage of those if you'd like. Put them into your paper money. See if I guess you took the list of equities into paper money. You can't use the scan in paper money. Remember, you have to utilize that in the live session. But once having done so, hopefully we're generating trade ideas for you that are consistent with what you're looking for. Follow Barb and me on X, Barb Armstrong CS, Kevin Horner CS. And if you'd like the conversation, really appreciate the thumbs up down below. That helps us out quite a bit. I don't think we got a survey today, but if you're looking for any chance to meet up with me, the number 1 is on X, and then the number 2 is to visit when we're at our events. I'll be out in Dallas at the beginning of January. Hope to see you all there. So with that, wrap it up for today. Have a great Tuesday, everybody. I look forward to catching up with you all again real soon.